Hey everybody, welcome again to the Thursday evening financial thing live stream. I hope everybody is having a great week. It's a little bit chilly here in Orlando, hence the jacket. We've actually had temperatures that I think have been colder than the UK at some point. Imagine that, but it does happen occasionally. If you could just hit the thumbs up on the stream to start, that would be great. Helps with the YouTube search, helps attract people to the stream to help them out, give them the financial education, which is what we are here to do. That's the mission of the Financial Thing website too. If you haven't been to the website in a while, go check it out. It's got a lot of resources there, as you can see right there, and always working on trying to update it. It is quite a task keeping everything updated, but as you can see here, we got a new article called Tips for Investing a Lottery Jackpot. You can see my face right there. If you happen to win the lottery somehow, get lucky, there you go. That's some tips on how you can win and, well, no, actually not tips how to win, but how you can invest in the lottery and how you can invest your jackpot if you did win. So it's pretty good stuff there. I do like to come up with some new interesting ideas for articles. And also thank you to everybody that's become a Patreon supporter. Every little bit helps support the channel and the expenses of running the website and the channel and everything that I do. So appreciate each and every one of you. Join the Discord, join the Facebook group if you have not. All the links are below in the description. We're going to get right to it. What are we talking about? This week, we're going to talk about some peer-to-peer lending news, some LoanPad news. We're going to take a look at the LoanPad loan book, see how that's coming along. I do have information, at least a name of the 8th LoanPad lender that I promised I would get to you from Louis. If you don't already know what that is, I will be sharing that too. We're going to talk about what the hell is going on in the stock markets. Again, another crazy, volatile week, and where I think that is heading, and some cryptocurrency news. We're going to talk about the Grayscale Bitcoin Trust and how I think that is having a big impact on the price of Bitcoin, certainly from a mindset view. We see these prices continuing to really go up a little bit and then sort of level off, but what's going to happen with that in the future, I'm going to give you my thoughts on that. And let's go ahead and say hi to everybody in the stream as we usually do, just to get things started. We got Mike in Southampton first, Aki Chap, of course, in Accrington, Paul New in Stockport, Robert Pates in Crete, in Greece. Hopefully it's a little bit warmer there. Robert, thanks for tuning in. Philip Waters in Milton Keynes, Stephen Helling, Nottingham, Peter Vincent Leatherhead. Nice to see you, Peter. Hilary Hare Duke with the Duchess of Nottingham name. Paul Bagworth is here. Brian in Woburn. I'm starting to remember just off of memory where everybody is located. Paul Bagworth, I can't remember where you are. Invest22 says boo in London. Hi, nice to see you. Dave Dawson, of course, is here. Snow in Greece. Vlad is here somewhere in the USA, I know, driving his 18-wheeler. Yes, Mike, I do have the 8th partner information for you. Alan Stratford, John Day, John Morgan, and Lionfish Hunting from the Cayman Islands, David Halls in Stowe Market. Nice to see everybody. Thanks for joining again. Got a lot of great information for you this week, so let us get right into it. Here we go. Boom. Share the screen. A little bit of news here we'll run through as quickly as I can get through. LoanPad increases maximum investment for premium account holders. So, of course, you have the classic account, which is, I think, 3% a year interest. I think it's pretty much as safe as you can get within the peer-to-peer lending sector. I use that word safe with the quotes because obviously nothing is 100% safe. But now you can invest up to 100 million, sorry, not 100 million, £1 million of your hard-earned money, which they used to have a cap of 250,000. Now, if you want to put more in, you're quite welcome to do that. There is a 60-day withdrawal notice on that account. And yeah, it's pretty good that they've been able to do that. It means that LoanPad is getting more loans in, and now they can raise those thresholds up. I think LoanPad is really in the right direction as far as what they are doing. Former collateral directors plead not guilty in court. These are the two, Andrew and Peter, the Curry brothers, that are being accused of fraud. Of course, they pleaded not guilty, as most people do when they first go to court. No surprise there. The Financial Conduct Authority has alleged that the Currys falsely told investors they were regulated by the FCA to operate a peer-to-peer lending business, which turned out to be completely untrue. And the regulators have also alleged that the former directors dishonestly abused their positions by transferring funds to a separate company before the collateral stopped trading after the FCA asked them to cease regulated activities in January 2018. And the brothers are also believed to have transferred further sums as they knew or suspected were the proceeds of crime into the bank accounts of Andrew Curry. So pretty crappy things that the Curry brothers have alleged to have done. As you know, we can only assume these things to be true, because right now we don't know if they're true or not, but it sounds like some pretty nasty allegations. One of the worst things I think you could do as a company owner of a financial industry services company is to transfer money into your own bank account when you know that your business is in trouble, which it seems to be what's going on here. I'm going to put it out there and say that I believe that that's what has happened with collateral. And of course, the investors are the one who've taken the brunt of those losses so far. So hopefully justice will be served against the Curry brothers, and maybe some of that money can be recovered. There's always a paper trail. That's the beautiful thing about banking. There's always that paper trail. So if they did do something like that, it's going to be pretty well documented. So we'll see what happens. 4 regulatory changes that could impact the peer-to-peer this year. I thought this was pretty funny. The Treasury has a consultation on financial promotion exemption. So the FCA wants to basically stop people from getting cash back for signing up for a peer-to-peer lending investment company to try them out. And what they're saying is they've done a consultation now saying that there could be exemptions to this rule if you are certified as a high net worth individual, sophisticated investor, or a self-certified sophisticated investor. The government proposal is increasing the threshold for high worth investors in line with inflation, saying they currently need to certify they've earned £100,000 in the previous year. But the government is looking to raise this to £150,000 and is planning to raise the net asset threshold from £250,000 to £385,000. What does that mean to you? Basically, absolutely nothing, to be honest, because if you go through these assessments through any financial company now, you basically just click a button and say, I am self-certified as a sophisticated investor, or I am a high net worth individual. There's no checks behind it. This is something that I actually talked about Jan on Blend Network the other day. He was talking about, most of their customers are now considered high net worth investors or sophisticated investors. And I said, Jan, but does that really mean anything at the end of the day? Because you just literally push a button and say, and fill out a tick box and say, yes, I am a high net worth investor. And then you go through to the next stage. So all of these treasury rules and things about getting paid on promotions and cashback seems like it's just fodder, and anybody can self-certify any way that they decide. I mean, you could get a 18-year-old kid who's got no money in his bank saying, yes, I am a sophisticated investor, check, let me get some cash back. Here we go. Money Thing administrator awaits court date while the fees increase. Of course the fees are increasing. Money Thing's administrator said it was unable to provide a clear estimator about loan realizations until the outcome of its court case, while its time costs have risen to £588,966. Another company in administration, Money Thing, and their administrator, who is a joint administrator, Moorfields, have now racked up their fees to a little bit under £589,000. It's probably well over 600,000 now, because we are 3 days later, and I'm sure they've racked up another 11,000 in fees. Moorfields issued an application to court on the direction of payments. This is payments that they had on hold that they have recovered. I think the £3 million they have sat on now. And they put in a application to court on the 16th of September 2021, and the hearing is scheduled for the 17th of February. So let's do a little bit of math here. September, October, November, December, January, February. 6 months it's taken for this hearing to be scheduled. Now, again, shows the really slow movement of the court system when it comes to administrations, not only in peer-to-peer lending, but any type of business. You're just going to be waiting around for a while. So the latest report filed with Companies House shows that Moorfields has on trust on behalf of MoneyThing £3.08 million from 6 borrowers they've recovered as of the 20th of December. That's made up of £2.86 million in recovered proceeds, £204,581 in default interest, and a little bit of extra cash held on as a contingency, some other funds. They said, this is what Moorfield says, as previously advised, the joint administrators had initially understood that in the event of a shortfall in repayment on a particular loan, that means a default. So if a loan is 500 grand and they are only able to cover 400,000, that would be the shortfall. MoneyThing Capital Limited is able to recover certain costs in priority to repayments to lenders. And now it says further on, as the appointed agent for dealing with the loan portfolio, which is largely in default, MoneyThing Capital Limited requires certainty on its ability to obtain reasonable compensation for dealing with defaulted loans after taking account of it being in administration. Now, from my understanding, what this is basically saying is that MoneyThing is actually jointly handling the administration with Moorfields, and the MoneyThing wants to get paid for handling these loans, which again is just another case of investors being put behind everybody else, certainly MoneyThing, certainly the administrators, and they want to get paid first. So basically the MoneyThing investors put money in, they get paid last, because this is how apparently business works. Pretty crappy, I would say. Yeah, but nothing new here. This just seems to be the way that peer-to-peer lending administrations are going. For everybody that's complaining about crowd property not having enough loans, looks like they are ramping up trying to provide more loans for those hungry investors out there. They have more than £200 million of projects either approved or undergoing due diligence as the investor demand increases. And £65 million of projects have been approved by their investment committee, and another £156 million is going through due diligence, while another £347 million is at the early stages of the loan pipeline, and they get about £270 million of applications for funding per month. Mike has also said that they only approve a small percentage of those, so we'll see. Hopefully they can provide some new loans. Don't forget, if you have any comments or questions, pop them in the chat. We'll do a little Q&A at the end. This is peer-to-peer lenders are facing £1 million bills for FCA appropriateness test changes. This means that peer-to-peer lending companies are going to have to foot a bill of about £1 million. I don't know if it's £1 million each, or if it is £1 million in total. But changes are going to stop users from retaking an appropriate test for 24 hours if they fail, and ensuing questions and subsequent tests are different. So they want to make it a little bit more difficult to pass through the appropriateness tests that we have to go through once a year, and this will cost peer-to-peer lending companies money to make these IT changes and for governance and all this stuff. I don't know if it's $1 million total, but I didn't read the story all the way, to be honest, because I didn't find it that interesting. LoanPad, there's Louis' beautiful picture. He is expecting steady, stable growth in 2022. They posted an overall loss of just £69,713 in their accounts for 2021. That's June to June, but he has been profitable since June of 2021. So I think those numbers next year, you're going to see LoanPad's accounts very much in the green. Louis said the platform revenues have been growing. Costs have remained the same and profits have risen. Profitability from June means we have been profitable on a monthly basis since June 2021 when we exceeded our costs. But of course, we were loss-making before that. So that's really good news. That's exactly what you want to see. Peer-to-peer lending company that is doing things right, aka LoanPad, heading into the green and doing everything right. And we're going to look at LoanPad, what's going on in their loan book too when we're done with the news. I thought this was funny. ISA millionaire Lord Lee decrees a tragedy of low interest cash ISAs. He's saying, Lord Lee says it's a tragedy that anybody would have money in a cash ISA. You shouldn't do it because the interest rates are so low, and that you should definitely invest that money. Put it in a stocks and share ISA or invest in something. Just don't leave it sat in the bank because you are going to be losing money to inflation. You don't want to be a mug. You want to be more like Lord Lee. Look at that. Very stoic, man. He looks like he's a millionaire and he's investing his money. I'm sure he has lots of it. Real returns on offer from peer-to-peer lenders, how they beat other assets. This is an interesting story which shows when you take off 5.4% of inflation losses, how much do you actually make on peer-to-peer lending on some of the platforms? Just a couple of examples. Landlord invests at 10.84%. You take off the inflation rate of 5.4, you're down to 5.44%. Blend Network down to 3.51% after inflation. Crowd Property 2.23%. Assets Capital 0.62% after inflation. So something really to pay attention to. You know, we don't often think about inflation and how that affects us in our daily years of spending, just to how everything's become more expensive and you just really don't make as much as you think you're going to on investments. But here's the thing, that inflation rate exists whatever you invest in. So I don't know, it's a bit of a mute story. I don't know that necessarily makes a difference to whether you would actually invest or not, because you've got to take that 5.4% of consumer inflation into consideration, no matter what you're investing in. We are going to take a look at LoanPad, and as I said to you before, I do know who that eighth investor is. Let me pull this up. Sorry, not the investor, the lender. Who is the eighth lender? The eighth borrowing partner. As we can see here, let me go to there. Where is it? My loan book, data feed. Here we go. So you can see here, we have now 126 loans on LoanPad's books, which has gone up. I think last time we checked it was a little bit, I think it was maybe 99. So excellent to see it going in the right direction. Still at an average loan to value of just 42%. 48.1 million pounds of LoanPad loans. The lending partner, 50 million pounds. Total security value of 115 million pounds. So average loan sizes is something I really like about LoanPad. 382,501 pounds average loan size. So they keep their loan sizes small. For some reason, the average loan size small. Obviously, there are some loans that are bigger than that. But statistically speaking, if one of those loans runs into trouble, the portfolio is generally not going to get whacked like some of the other peer-to-peer lending companies that have really humongous loans. You can see here, losses are zero. The interest coverage fund, which is a really small amount when you consider the whole loan book, it's a little bit, well, less than 1%. But the ICF is full, 42,000 pounds in the ICF, just in case something goes awry. And this is new since I've looked last time. They've got the number of total loans repaid since inception. So 101 LoanPad loans have been repaid. That's a lot of repaid loans. And then the total over here of loans since LoanPad launched its first loan, 227 loans. Pretty amazing considering, you know, this is really short time period for LoanPad. We're talking about, 2019. And they've had 36.3 million pounds of loans paid. And here we have the lending partners, number 8. The 8th one that was added is a company named Artemis, Artemis. I haven't done any research on Artemis because I just received that information from Louis about 30 minutes before the stream went live. But yeah, we'll do some digging and see who they are. But Louis said they've been lending for a long time. So it seems like a very solid 8th edition to LoanPad. And total lenders, 3,545 lenders now on LoanPad. Average lent amount is £14,231. LoanPad definitely heading in the right direction. I think doing everything about as good as you could do on a peer-to-peer lending company. So very happy to see that they are heading in the right direction. Now, let's do a quick Trading 212 update. If you haven't seen it yet, I just posted a video that I recorded on the 24th of January, which was a update on the Trading 212 experiment. And it's been a rough week in the markets for sure. You've definitely seen some sectors getting really knocked, like Tesla, the tech sector, the oil sector has just been extremely volatile. Look at this Palantir share price down to $12 US. We bought at 25.62. So good timing on that one. We're down about 50%. But that's how it goes in the stock market. And the portfolio right now is standing at £14,747. And as you can see right here, 9,150 invested. So on, I think it was Monday, I went to cash about, £5,000 or £6,000 in cash. I sold off some of the oil stocks because I thought things were going to get volatile with what was going on in the Ukraine and with the Fed announcement, and it has really been the case. I mean, we've seen some of these oil stocks kind of taking a bit of a hit and then go right back up again. It just really depends on the stock itself. But you can see here Vermilion, which is one of the stocks that I'm very bullish on. Look at this downfall that we had from $15 US down to 13. It doesn't sound like a lot, right? $1.50, but that's 10%. And then right back up here, looks like Batman. See Batman up here. Had a high of $16 US, so we had a $3 swing in 1 week. And yeah, it's now, this was up, I think 80% in the portfolio, and now at 101%. So I sold out when it was about 80%. So in the title of the video, I put my poor stock market timing. This is a case of just bad timing and not knowing the future. We don't know. The crystal ball is never accurate, right? But that cost 20%. So I had about £2,000, sold out about 1,500. So that was about a £300 timing mistake, because now it's back up to over 100% of where we started at. And then you can see some of these other stocks that are still heavily in the red, like Alibaba, 20% down. CleanSpark, 62% down. I mean, this CleanSpark bit mining stock was at, where did we buy? $15. So we've lost 60% of the value on that. That's just going to be a hold one unless we need to take this as a tax loss at some point, which may happen. But Hut 8 mining again, Bitcoin miner down 33%. Lloyds Bank's doing really well, up 105%. Kind of wish I'd have held on to the rest of those stocks that I dumped a few months ago, but hey, that's just the way it goes. And then Occidental, we got Centrus Energy up 33%. So I think obviously we had a Fed meeting on Wednesday, which everybody was really watching what was going to happen, and the markets were very unstable. You can see here with Dow's down about a third, 0.3% today. Nasdaq down 1.43%. Tech stocks absolutely getting hammered at the moment. For anybody that's been watching the stream for a while, you remember our Magnite shares that we did so good on. Look at this Magnite, $11, down 11% for the last week. This is crazy. We sold out of this in the high, I think it was the high 40s, and we had bought in probably a year ago around this exact price. So just goes to show you how much tech is absolutely just taking a beating. Look at this, down from 61 down to $11. So is that a time to be buying in? I don't know for Magnite. Maybe not. I think tech is really going to still continue to get hit. And commodities, oil and that will be short-term volatile, but I think there's a lot of room in those sectors to make money in the markets. But anyway, we saw the Fed make a statement, Jerome Powell saying, this is the most important part. It's not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And there's not much sense in trying to guess when these rate hikes will happen. So the interest rate hikes are going to come. And I think that the Fed is stuck between a rock and a hard place right now, because they know they've got to either tackle the inflation with an interest rate rise, which is definitely going to cool off the stock market. But I also think that the Fed is very concerned about raising those rates and crashing the markets. They've already seen what has happened with that volatility. And the last thing the Fed wants to do is bring the stock market down. So I think Jay Powell is really stuck in a very difficult place. They are going to end the pandemic era stimulus with the money printing, they say, with asset repurchasing. So those assets that they have is about $8 trillion US of assets that the Fed now owns. They will be selling those off apparently, and who knows, if we could predict anything, great, we'd all be billionaires, right? But we don't know what's going to happen. I predict that we'll see a rate rise in March, but there's also another part of me that thinks that maybe there's going to be some political posturing in the US to where they don't want to raise the rates until after the midterm elections, because, that's what politicians do. They maneuver and snake their way through, and so who knows? We may see a tiny interest rate hike in March. We may just not see it until the end of the year. We have no idea, but it is having a big effect on the stock market. So, and I think stock markets will continue to be volatile for the next few months until there's some kind of stability with this Fed decision. I just think you're going to see a lot of markets really bouncing around. Could be if you're an advanced trader, you're probably able to profit out of that somehow. I'm not a trader. I don't try to gamble in that way, but there are some people that will make money off it. Let's talk about what's going on with Mr. Bitcoin here. We have seen prices. What is this? The 1 day? It's the 1 day chart. We should look at this bounce. 37,000. This is the 1 day chart. Back to 35.5. Back to 37,000. Back to 36. Which, is not huge percentage moves actually for Bitcoin. Down here is, I don't know, a couple of percent. But we are going to see, I think, this kind of movement for a while until things sort of settle down with again. Bitcoin seems to be really tied to the markets at the moment, and I think I have a pretty good handle on why this is happening. But if you look back at the charts over a period of time, you can see, for anybody that's bought Bitcoin at 30 or 40,000 who's worried about it, 45,000, and saying, oh, yeah, it's not going to go back up now. blah, blah, blah. This is a 1-year chart right here. And the point of showing this chart is you can see how much this Bitcoin asset has actually moved during a 1-year period. And not only has it done it twice, it's done it 3 times, which is down here from 30,000 all the way up to 63, right? Back down to, how long was that? That was 3 months. So it doubled in 3 months. Back down to July when we had that another low of 31,000. Boom. Back up here again, 67, almost touching 70. So 4 months. And now we've had this decline now, which is November to January. So point being that this Bitcoin asset can move quickly. And while it seems like it's just floundering around right now, that doesn't mean anything. The sentiment on Bitcoin is still very positive for those that understand it. For those that are short-term, investors who don't understand it, they look at this and think, oh, Bitcoin's dead. Well, it's not. It's just a part of what Bitcoin does. What I believe is happening is a lot of this is to do with this Grayscale Bitcoin Trust. It says $24.3 billion under management. This is a way for not only retail investors but also institutional investors to buy into Bitcoin, the actual real Bitcoin. We're not talking about the futures, which is some of the ETFs are out there are futures, which is betting on the future prices. This is more of it's not a spot ETF, meaning it's not an ETF that owns the actual Bitcoin. It's a trust that owns the Bitcoin. The interesting thing about this, and by the way, you can buy this if you want to get some exposure to Bitcoin, but you don't want to buy the actual Bitcoin, you can buy these shares for $24.68 US right now. Now, what's happening in here is this is really trading at a discount, because if you times this out to what the actual price of Bitcoin is, what we do is we say, is it trading at a premium or a discount? And right now, let's see, zoom in a little bit on this for you. You can see Bitcoin, this Grayscale Bitcoin Trust is trading at a 27.46% premium over the actual price of Bitcoin. So the holdings per share are $35.07, right? Which is closely correlated to the actual price of Bitcoin, which is around 35,000 US dollars. And you can see here you can buy the shares for $25.44. So a lot of institutions are buying these Grayscale Bitcoin Trust shares at a discount. And the problem with this Grayscale Bitcoin Trust is it's really big. It owns 643,890 Bitcoins in this trust. Also Ethereum, you can see they have Ethereum Trust with 3.1 million coins, and then Litecoin and some other things. Now, there's a lot of people who are saying that one day this Grayscale Bitcoin Trust will become a spot ETF, meaning that no longer will it be a trust, that Grayscale would just actually, it'll be a tradable ETF that, you could trade like a Vanguard S&P 500 ETF, and that will be much better for the price of Bitcoin. Because, as you know, you see this thing is trading at a discount right now of 27%. So it's really putting a drag on what Grayscale's Bitcoin is actually worth, and then the share price. The thing is, though, and this is the issue, a lot of institutions are not going to buy actual Bitcoin because they can buy this share at a 27% discount. So if they were to go buy Bitcoin for 35,000, essentially they can buy one Bitcoin's worth through this Grayscale Trust for 25,440, which is a big discount. And now, until this actually Grayscale becomes a spot ETF, that's not going to change. And the problem is, I don't understand how this could become a conversion to an ETF. Because if it's trading at a 27% discount rate to the actual price of Bitcoin, obviously if they move this to a spot ETF that own the actual Bitcoin inside the ETF, Now the price, the Bitcoin is only going to be worth 10,000 less than the actual price of real Bitcoin. So that has to be made up, because when this becomes a spot ETF, it has to trade at the price of the actual Bitcoin price. So this share would have to be 35.07, which would be 35,000, a little bit more than $35,000 a Bitcoin. So how that discount premium rate is going to be made up for it to be equal to what a Bitcoin price is, I don't really understand. Maybe the folks over at Grayscale have a method to how they're going to accomplish this, but once they can get this to a spot ETF, if they can, that's going to be a good thing for the Bitcoin market, considering that they own a huge amount of Bitcoins in their trust. They have 643,000 real Bitcoins inside this trust. So if you want to get exposure to cryptocurrency without buying the actual crypto, maybe you find it difficult to understand, maybe it's complicated for you, you can buy any exposure to Bitcoin, Ethereum Classic, Litecoin, Mana, which is Decentraland, any of these other ones, Solana, Chainlink. You can buy them through these Bitcoin Trust shares. Personally, I don't own those. I'd rather own the real Bitcoin, but that's just another way for you to become exposed if you want some cryptocurrency exposure. Other news. This is very, very interesting. The LendInvest chair, Christian Faze, who ran LendInvest, is now setting up a crypto mining operation in Texas. So I was really surprised to read this. I missed this one in the news, but he has quietly set up crypto mining operation in which he and a small group of investors have poured tens of millions of dollars into it that will be based in Texas. He already has crypto mining machines running in Pennsylvania and Tennessee. This is interesting. He has chosen to base his operation in Texas and plans to draw entirely on renewable energy sources, a mix of solar, wind, and hydroelectric. And the machines that Christian is currently using are 75% powered by renewable energy. Now, for everybody that's out there saying, oh, Bitcoin is terrible for the environment. Well, no, this is just a case of how some people are trying to use green energy to use, mine Bitcoin in a more efficient way that's better for the planet. So I thought that was really, really good news. And by the way, if you actually study this whole electricity debate on what's going on with Bitcoin, which I think is a important discussion for sure. I don't downplay that electricity usage is bad or good for the environment. It's not. Obviously, it's not good. But there's a lot of wasted energy. If you go to Parker Lewis's articles on the energy consumption of Bitcoin, there's some really good statistics about how much energy actually just gets leaked out of the transmission lines into the environment, which is and apparently the loss of that electricity in those transmissions is enough to power the entire Bitcoin market. So, the whole narrative about, electricity bad for the, Bitcoin destroying the environment. Yeah, there's bigger problems out there. Bitcoin will become more efficient as more green energy is used to power those mining operations, for sure. But I do think it's an important thing to note about that transmission loss. So maybe it would be better if the governments or people that run the power companies could figure out how to stop losing that transmission of electricity, and maybe that could be used to power these Bitcoin mining operations and save the planet. So that's my rant for today. Anyway, I hope you enjoyed the information this week. How long? 44 minutes. I think we're going to get under an hour today. Yeah, I do. I'm predicting that. It's good. Good to be under an hour. Again, please hit the thumbs up button if you haven't. I'm going to read through your comments real quick, and then hopefully we can get out of here behind an hour. Vladimir is in Ohio in the US of A. Mike, yes, has Lewis answered on the 8th lending partner. If you missed it, that 8th lending partner is Artemis. That is the 8th lending partner of LoanPad. Let's see. Annabelle Nair and Sunny Sherborne, Dorset this week. Hello, Annabelle, who's not in Spain. Usually Annabelle is in Spain. So Patty is here from France. Bonjour, Patty. Dave Dawson, I looked at Connective Lending's financial report. They said they only had 3 workers, employees. Anyone know if that's right or if I misunderstood? I don't know. Comment if you know the answer to that question. Paul says, I hope Crowd probably keep the good quality of loans. I think they will. Robert, is good buying time for Bitcoin now? Hold on. The crystal ball says maybe. Yeah, if you have a long timeline plus 5 years, I think this is a great opportunity to buy Bitcoin. And here's why. Okay. Let me show you. Which chart should we look at? Let's look at the 1 year. When the price was here, wait, no, this is not. This is let's pull up BTC. Oh, Bitcoin futures. Can we see the book? Oh, that's interesting. Let's go crypto. Bitcoin. You know what? Let's go to. See if we pull up GBP. See if they have that in here. Bitcoin, British pound. I'm going to do this for you in British pounds today, because that way you'll understand. When the price was up here at £49,000, I was getting a ton of emails of people saying, oh, I wish I'd have bought in down here at 42. I've missed my opportunity now. I won't be able to get in. Everybody was on this narrative that Bitcoin was going to go to 100,000 US, myself included. Obviously, I was really shocked, this whole pullback happened, but that's the way it goes. That's, Bitcoin does that sometimes. Shocks everybody. Sometimes these charts don't mean anything. I'm not sure Bitcoin runs on technical analysis like stocks do in the same way. People claim it does. I'm not sure. But if you look where we are right now at 27K, when you were looking at Bitcoin at 49,000, you were wishing you had an opportunity to come in at 27,000 pounds. So personally, in my humble opinion, if you are looking at a timeline of, if you're looking at a timeline, let me close this out. I don't know why this is. If you're looking at a timeline of 5+ years, preferably 10, no guarantee, of course, invest at your own risk, not financial advice, but a buying opportunity of 27,000 pounds compared to here at 49,000 is a bargain. I mean, you're getting close to a 50% discount. Okay. So is there a guarantee? No, of course not. But we all know what Bitcoin can do. These highs will eventually become the new lows, I believe. I think this point of 49,000 pounds will become the new low at some point. When? It could happen in the next month. It could take a year. But buying in at 27, I think, is a great opportunity that we may not see again. We may. I mean, this thing could go down to 20,000 pounds. But if you're cost averaging in, you've got a few thousand you want to put in half now at 27, and wait and see what it does over the next month. Or buy once a week. That way you're averaging into these peaks and valleys. That's what I choose to do. So yes, I think it's a good opportunity to buy myself. I mean, look, timing is just so hard. I bought in at, I think the highest I bought in was 52,000 US. I've also bought in at 18,000 US. So, you know, just the peaks and valleys of it. You don't know what it's going to do. So if you believe in convictions of what it could do in the long-term future of an asset, you hold it. Hold your nose, plunge in, see what happens. And I would not invest your entire life savings in. No. Oh, let me get rid of this guy. Ban. Okay. The Coinbase Pro app I downloaded looks nothing like the one in your tutorial. Yeah, I think I used the desktop version. Yeah, I tend to use the desktop versions when I'm using Coinbase, so it's obviously going to look different. Yeah, that is true. LoanPad, technically, if you factor in inflation, you are going to lose money. But it's better than the bank for people that are, want a safer place to put some of their cash. I think it's a pretty good place. I think LoanPad needs to look at interest rates for investors. I mean, I've talked to Louis about this, and he just basically said, well, in order for us to keep this low risk, with the way their business is set up, I think that they are happy to offer 4%. I mean, there's obviously a market out there for it. Otherwise, they'd be chasing the higher interest rate loans. But, I mean, I don't know what the statistics are, but there is billions of pounds in savings accounts in the UK that is getting 0.5, 0.6%. So there's a lot of money out there that people just are not willing to take any risk on. I don't think they'll change that anytime soon. Maybe one day they'll create another product or another account that is a little bit more risky, but Louis is very, very keen on keeping people's money safe. And he just doesn't want anybody to lose. Scan through quickly. I'll try to get some more info. I see your comment, Mike, about the registration of Artemis, but I'll try to get some more info about Artemis from Louis, so I have it next week. Artemis used to back rates at probably a different Artemis. You're probably thinking of the one that offers funds. Yeah, I used to have an Artemis fund that didn't do very well. Dave says, I park money in LoanPad while waiting for other deals to be available elsewhere. That's a good way to use it. Yeah. Looking at ETFs, any suggestion for me to consider? Yeah. I mean, honestly, the only... Oops, let me close this out. The only ETF that I tell people who are not advanced investors is this. Let me pull it up. Can't spell. Where is it? Let's put this up on the screen. Ooh. Here you go. the S&P 500 UCITS, basically it's just a Vanguard S&P 500 ETF. I like it. Look at this fee, 0.07%. What I don't like about it versus the index tracker is it has only 509 stocks, but in the grand scheme of things, you know, most of the movements of the Vanguard index tracker comes from those top 20 stocks that make up so much of the fund. You know, the big giant companies like Google and Amazon, Facebook. So if you want to, you want a good quality ETF, this is the one. What are we at? Market cap $221.4 billion. So it's a decent sized fund. And here you've got the main US companies: Apple, Microsoft, Amazon, Alphabet, Tesla, Facebook, Nvidia, Berkshire Hathaway, and just more stocks. £65 for the ETF. 65.13 today. If you look at the performance of this ETF, let's see. Show me the performance. So it looks like they started January of 2019. They had 30.7% that year. Actually beat the benchmark. I don't know how it did that. Maybe with the dividends, because it's an accumulation fund. So 18.4% January 2020 through the year, and then this year's been another big one, 28%. So a really good performing ETF. And even if you were looking past history, this ETF would perform like the index tracker. So very low fee. That's the one I would recommend. You can get that through, you can get that on Trading 212, I think, too. Hang on, let's take a look. Let's see, there you go, look, right here. Is this a different one? Oh, this is the Vanguard. Yeah, just get this one. It's called the VUSA, the S&P 500 ETF, £62 and 16p. So I think it's the same one. But you can buy that on any of these major trading platforms. And if you feel so inclined, you can also do a FTSE one. I don't recommend it. It's not my personal one that I would go for, but you got that. And then you have a world one if you want world exposure. I can tell you that these world trackers have been underperforming the US ones by 8 or 9% a year for the last few years. So I think the US S&P 500 is the one that is going to get you the best returns. Historically, of course, that doesn't always mean anything, but that's where I would go for my ETF. Oh, here, incidentally, this is where I started selling out. I forgot to mention Monday, 24th of January. Look at that. I was at £14,175 when I sold out to cash. If I'd have just left the damn thing alone, it's already increased £600 with £6,000 being on the sidelines. So I reckon this would have been over 15,100 now if I'd have left it alone. But I went on the information I had. This is, again, the problems with market timing will cost you money, big time. So if you think you can get the timing right, good luck, because it's very hard. Yeah, best performing stock is a UK FTSE stock. Who would have thought? Imagine. Do loan pad pay interest for parking money there? Yes, they do. I have about 5%, I think, of my cash is just sitting uninvested, and you still get paid on it. Patty, so can I make a suggestion? An edit button to correct typing errors. Oh, I don't know. Let me just raise my volume. Here we go. Is that better? I need to get something to fix this mic to the desk so I can move it up here. I just didn't want it right in front of my face like that. But thanks for the suggestion. I'll see what I can do. I don't think we can have an edit. No, you'd have to talk to YouTube about that. I don't think they're going to add a edit button for comments because it's all live. I read that Bitcoin has been oversold by Wall Street. More coins sold than mined. Yeah. Bigger screen as I can't read what's on Lawrence's screen. You need to get yourself a bigger screen, Robert. Volume, yeah. Who would put their pension on Bitcoin? Well, funny you mention that because I actually put a part of my pension allowance this year into Bitcoin and Ethereum because if my hunch is right and that thing does go to what I think it's going to do, that will be a tax-free event through a pension. So that's what I gamble that I think is going to happen. Sure, I could be wrong. We'll see. Russia's on about banning Bitcoin. Yes, they are. And guess what? China is, I think, is going to be reversing their ban on Bitcoin mining because there's been news reports that they are going to add tariffs to mining now. So all those miners that they kicked out of China are apparently going to be allowed back in. So there you go. Yeah, I'll check into Artemis. Let me get rid of this guy. Still big on Ethereum. I think it will outperform Bitcoin when the upgrade is complete. David, an Ethereum fan. Yeah, when is that going to happen, though? That's the question. Ethereum is a pain right now. It's broken. The transaction fees are ridiculous, and 2.0 is supposed to come out. Question is when? Who knows? Is there a chance it never comes out? Possibly. I don't know. But I do like Ethereum. It's being used all over the place. Problem is the price goes higher, the Ethereum fees become more expensive. Did we make it under now? Oh, God, we went over now. Volume is fine. Thank you very much. Hi, Mark B. No problem. Hope you enjoy the catch-up. Do you know of any Vanguard index funds that have exposure to crypto? I may open a SIP. That's a good question. I don't off the top of my head. I will look into it. But actually, what you do have is, I think, if you have exposure to mining stocks like Hut 8, CleanSpark, Marathon, which is Riot, I just have to check and see if they are in the S&P 500 because I'm not sure. Let's see. Yeah, so here's a good example of how you do actually have exposure in an index fund to crypto. A lot of these crypto mining companies hold Bitcoin on their balance sheets. For instance, this is CleanSpark, which you can see is a NASDAQ listed stock. So you would have exposure to Bitcoin through CleanSpark. Let's see what else. Hut 8. I would imagine there's also a NASDAQ. Yep, this is a NASDAQ stock. So you would have exposure. Sorry, I'm getting this wrong. Through an index tracker, you would, not through an S&P 500 ETF. So if you get the index tracker, like the Vanguard index tracker, you'll have exposure to cryptocurrency through there. Because most of these companies are going to be through NASDAQ. Yeah, you can see here. Got right here, exchange, NASDAQ, Riot is one. Any, see which one any is on. You cannot get any stocks on Trading 212. That's another cryptocurrency mining company, Canadian. So yeah, that's why I go for the index tracker versus personally. I do have some of the ETF, but I usually just buy the tracker. It's got more stocks in it. But I think it's a small exposure though. I mean, if you're talking about those stocks, they're not big market cap stocks, so they're not really going to move the index fund much at all. This one, CleanSpark, is only $252 million of market cap. So if this stock moves 10%, it's not going to move the index tracker much at all because it's such a small market cap. You're talking about, I don't know what the market cap of the index tracker is, but it's pretty big. Let's see. Let's see if I can pull up any. I think it's called Sphere. That was one that I made another terrible timing by Sphere 3D. Crypto. Where is it? Bear with me for a second. I want to show you. Because I'm very transparent about what I do with the mess ups I make. This is just another example of bad timing. Okay, look at this one. This is a good one. This is now $1.80. Canadian. I think it's NASDAQ CM. You can buy this on some exchanges. I bought this. Check this out for market timing. I think I bought it at $7.50 US. So close to the top, and rode that all the way down to $1.80. So yeah, if you're thinking about dabbling in stocks, it's very easy to get it wrong. But it could have been worse. I mean, the highest range right here is 11 US was at its highest price point. So, you know, but it's been just on this steady decline. Since crypto has been getting really hammered, then the price of these mining stocks also tends to go down. So yeah, Mike's had a punt on it too. Just hold on to them, because I think when Bitcoin eventually makes its run, these stocks are just going to really take off. So hopefully. Yeah, Dave's not a Bitcoin fan. That's okay, David. It's not for everybody. I still say, look, if you are a real skeptic, I'm a skeptic of certain things in life, okay? But there are things that I like to research. I was a skeptic of Bitcoin in 2000, 12 when my friend said, let's put in 500 pounds each and to this thing called Bitcoin. I think it's going to be really big in the future. And I said no, because I looked at it and I thought, oh, this is ridiculous. I'm just peeing away the money, right? And then you saw what happened. So I think, who was it? Ronald Reagan? Was it Ronald Reagan that said something about skepticism, inform yourself? And I can't remember. Somebody will know the quote. It's like something about discovery. Anyway, so I started reading more. And I think this website right here, for anybody that is a skeptic like Dave, and I love you, Dave. This is nothing. I don't blame you at all. But this website is excellent. These articles that Parker wrote, it's called the Satoshi Nakamoto Institute. Parker Lewis wrote these really great articles. There's tons of them here. And everything that you think about Bitcoin, the reason you could think, I don't want to put money in this, it seems ridiculous, I can't, there's no value to it, the electricity situation, it's a fraud, it's a Ponzi scheme, which, by the way, Bitcoin can never be a Ponzi scheme, because a Ponzi scheme, you are paid out of the money that other people are putting in. There is no payout in Bitcoin. There's no dividend. You just buy and sell. So it can't be a Ponzi scheme. But these articles here, like this one, Bitcoin is not a pyramid scheme. Bitcoin is not backed by nothing. I like that one. These are great, well-researched articles. And if you're really interested in learning, about things like Bitcoin, even if you never invest in it, just to become informed and say, wait, maybe I was wrong. Maybe there's some things that Bitcoin can fix. Like this article, Bitcoin fixes this. I love this article. I think it's so good. These are really, really well-researched articles about quantitative easing, money printing. Bitcoin can't be copied. Bitcoin, this is a great one. Bitcoin does not waste energy. I love this one. It's for everybody that thinks Bitcoin is just destroying the environment. Go to nakamotoinstitute.org. You can Google Parker Lewis Bitcoin. I'll link this page. But I think this is important reading, because it really could change everything that you think you know about this weird asset. And it is a weird asset. It's a really weird asset. I get it. But it's also been life-changing for a lot of people. I'm going to put this in the chat, so if you want to read it, copy this down before the stream ends. Crypto articles. Because I want every single one of you to win. And if this Bitcoin thing does what I am hoping it will do, in 10, 15 years, goes to 500,000 US for $1 million, I want you to win. And I want us all to win. And that's why I talk about this stuff. It's not, because it doesn't make any difference to me whether you buy Bitcoin or not. It makes no difference to me. But it does make a difference to me if you win in life, or if you lose, because I care about you guys. I really do. So I hope you'll take a look at that, read. Come back next week. Tell me what you think. Tell me you think the articles are full of it. If you think, yes, they have a point. And then there you go. Yeah, Mark, feel free. You can reach out. If you want to email me too, it's help@financialthing.com. That's funny, Paul. I switched on 5G in my area. Brain fried, but great data speeds. I know when I was in the UK, I was having such problems with the mobile phone services out there. The 4G was just so slow. For everyone who makes money, there is someone who loses it. So if some are making millions, a lot are losing. Maybe, yeah, I mean, if you sell at a loss, yeah, you can lose money. That's the same way with everything in life. If you go to a casino, somebody's winning and losing. Every stock that you buy, somebody is winning and losing. Everything's the same. You say, Dave, not at all. With a company, it can make more money to distribute to a shareholder. Yeah, but at what cost, though? I mean, what is it all about in life? Money is these huge, massive companies, right? They are all for profit, you know? So they're giving money out to people in the form of dividends and shares and blah, blah, blah. But at the end of the day, it's all about money. That's all it's about. Yeah. And I agree with Mark. You are buying an asset. One day this Bitcoin stuff is not going to be easily bought. It's going to be rare. And, look, could be wrong about it. Absolutely. Could it go to zero? I don't ever think it's going to go to zero, but you never know. We all have our convictions, right? It's certainly not a gamble. I think if you've got to really research and learn about it and see the fundamentals, what it's for, why it exists. And then maybe you won't think of it as such a gamble. Because I used to think of it as a gamble. 100%. Anyway, I'm going to wrap it up. I think I've rambled long enough this week. Next week, Thursday, 7:30 p.m. UK time, 2:30 p.m. US Eastern time. Have a great weekend, everybody. Enjoy yourself. Again, consider becoming a supporter of the channel through either here or sign up for the Facebook group. Whatever you want to do. I love each and every one of you. I hope you have a wonderful weekend. And we'll see you next time. Take care. Bye.